this new asset class. So I've been a trader, as I said, for many years. I've traded most asset classes, but most of those asset classes I've traded have been tangible, whether that be gold, whether that be a bond, whether that be a piece of real estate. All these assets have been around. But the one thing about a digital asset is that it's a brand new asset class. So we recognised that in Mauritius last year. We put out guidance notes around that. And we said specifically that a cryptocurrency was a subset of a digital asset, but more so that this was an asset class that was only good for what we call sophisticated investors. So, you know, it's an interesting morph, I guess. So a security token is just a digital form of securities. Now, the blockchain technology has been around since 2010. As I said to you, the first application of that technology was a cryptocurrency, but it's certainly not the last. So we've seen you know, this asset class morph into different things, as I guess as it's come into existence. So in 2017, this ecosystem, blockchain, cryptocurrency ecosystem, were finding it very hard to get money. So they were finding it almost impossible to go to the bank or go to their families and say, hey, we've got this really cool idea. It's this really cool technology. We want to get some money and to go and build these companies. Everybody in the traditional world said no. So what did these, at that time, a lot of them were very young kids, technical entrepreneurs sitting in the garages at home. They said, all right, we're going to build our own way of generating cash for our businesses or money. So something came into existence called an initial coin offering. An initial coin offering gave sort of a bit like, I think, a loyalty program for an airline. So I'm an Emirates member. I can use my Emirates points to get an upgrade on an Emirates flight or to buy a set of useless glasses, but I can't use that token outside the Emirates network. So these initial coin offerings became quite the thing of 2017, and they looked very much like securities. But a lot of these tech entrepreneurs were trying to get around the realms of regulators and regulators saying, if you're raising money for a company and you have the impression that you're going to make money for your company and there will be a profit, then you're a security. So the ecosystem said, no, we're not securities. We're actually building the next Google 40s or the next Facebooks. But in matter of fact, many of these initial coin offerings were actually scams, and they were purely just security offerings, and they were scamming people. So we as regulators, we do one thing. We can't stop technology, but all we can do is guarantee that consumers and investors are protected. That's the role of the regulator. We're not here to stifle innovation. We're certainly not here to stop new ideas coming out, but we are here to ensure that regulation makes sure that that people are not scammed. So I started writing regulations around ICOs in Bermuda back in 2017, and what we saw was a huge hype cycle. All these companies were going onto the internet. They were creating little, what we call white papers, selling these ideas to a lot of people that had no understanding of risk or what they were getting into, and then running away with the money. So once I started to regulate that space, a lot of the noise and a lot of the scams went away. So that hype sort of started to die down in 2018 and 2019. The thing was around an ICO, it was a really good idea. So it was a really good mechanism of raising funds for an ecosystem that is full of small and medium businesses that couldn't get traditional access to capital. The only problem was it wasn't done in a regulated fashion, and there was nothing tangible behind an ICO. So it just gave you the right to participate, as I said, like in the Emirates loyalty program, but you don't get equity rights. So a lot of cryptocurrencies are not backed by anything. Bitcoin there are 21 million Bitcoins in existence, but many of the other cryptocurrencies, some of them are based on the Bitcoin blockchain, some of them are based on their own native blockchain, are not backed by anything. A security token is nothing more than a security in a digital form. So what did blockchain do for us all? I was, as I said, a trader for many years. Now, the issue with traditional ways of raising money takes a very long time. So if you go and do an IPO on the stock exchange, there's a lot of people involved. You have accountants, lawyers, you've got to go on road shows. It's very expensive. And it's not very efficient. So the blockchain technology in itself has done two things for the world in the last 10 years. It has given us a new level of cybersecurity for ledgers that we've never seen, and it's also enabled ways to do what we used to do in the old financial world much quicker and faster. So the processes and procedures that we see in equity markets around the world are very, very, very convoluted. They're very slow. And in equity, it takes you 3 days to clear and settle a trade. If you're trading a water entitlement, that may take you 28 days, and I still don't know why. But because of this new technology, blockchain, we can crunch those processes and procedures into being instantaneous. So as I said, a security token is defined under the Securities Act of 2005. It is just a digital form of a security. The difference is that it uses this new technology, blockchain, to squish all the processes and procedures that would have taken you a long time to raise money into a matter of minutes, not years or months. And the other thing is, it's a very good way for small and medium businesses to raise money. It's a very expensive route to go and do an IPO if you're a small medium business. So when we looked at what a security token could do and which sort of the market we're aiming at, it's for companies that are effectively in probably a Series B to a D round of raising capital. So they exist. It's not a startup like all the ICOs were. It's a company that has revenue. It has cash flow. It's established, and it's looking for equity partners. With an ICO, don't forget you've got no equity. So a security is just a security. So everything that the Security Act says that you must comply to, you still need to around this digital form of a security. But it's a niche market, I guess, for those companies that want to give equity, but they don't want the long and slow process of going through the traditional means and having many middlemen in it. So yeah, so it's just the issue of a token and its way of raising funds. If the STO is done from Mauritius or within Mauritius, they're subject to the Securities Act. So as I always say, don't try and fool me if you tell me you've got a utility token, because I'll even argue that Ethereum, one of the protocols that the ICO boom came out of, was a security. So if you look like a duck, you walk like a duck, and you quack like a duck, then you probably are a duck. And there is nothing wrong with going to the regulator and saying, hey, we want to use this new offering to raise money, but we want to be fully compliant with the Security Act. So that's all it is. Renu's going to tell you who can issue them.
Yes, I think, thank you, Loretta. I think it's once any offerer decides that they want to float securities in a digital format and they want to raise funds. So what they get in return is an exchange for an ownership or economic rights in relation to underlying real assets. I think this is what we're talking about, just to make a difference between the traditional world and actually this securitized or not securitized, a tokenized world. There will be underlying assets at all times. It's just that those rights and ownership, economic rights and ownership to those underlying assets will be held through tokens, which will be offered and traded on a digital format. So how do you do that? Just as an illustration, a security token, it can be issued in any format. It could be in the form of shares, usually debentures, securities, derivative contracts, or even in a unit in a collective investments scheme. So I think what I'll stop here and share that when actually we decided to go this route of issuing the guidance notes on on the STOs, we reflected back on our Securities Act, which, as you would see, is 2005 Act. And to our good surprise, we realized that it's a very modern piece of legislation. One can argue it's just 10 to 15 years legislation, is not old, but it was really good in the sense that we did not have to make any amendments to the Securities Act. So the definition of the security was wide enough to allow us the tokens to be issued to actually capture any form. As I said, it could be share, debentures, derivative contracts, anything you can. So it gave us a platform to actually come to this new method of raising capital, which was modern. All it did was that STOs which were issued, it just gave a cryptographic claim recorded which otherwise would have been in a share ledger or so. It would be in a paper form, would be now in a public-private ledger. And what we are talking about here is that these ledgers, of course, is based on technology, which we commonly call the distributor ledger technology. Yeah, so that's how it is. It gives rights to the third parties. What it does, it removes from the equation the intermediaries. So everything comes onto the platform itself. So this is the features which we managed to establish under the current Securities Act without making any amendments.
And just on that, so the blockchain technology itself, it's just a fancy word for a database. To be honest, blockchain is nothing more than a large database, but in times, every other database in the world has been hacked. Bitcoin was the first blockchain. It's the only database that has never been hacked. So every government database, every company, every database you can ever see that's been held centrally has been hacked. And that's because the information is held in a centralized data. When you distribute the data to many, many thousands of computers around the world, it's very useless to hack something. So the blockchain is itself, it's what we call it's on a distributed ledger. It's secure, it's immutable, and it's transparent. So that's where the technology comes in, because we've never had technology like this in the past with all these other asset classes to be able to enhance the efficiency of how we execute a trade.
So when we look at the ecosystem, I think this is what we're talking about. You definitely have an issuer or a market participants who want to get into the STO issuance space. It needs a trading platform, and in this case, we are having online trading, a digital trading platform, TSS as we call it. It is required to have a custody service provider. In this case, if Mauritius has issued, FSC has issued rules which applies to the digital custodians. So this is something, again, which comes as a form of the whole bouquet to get into that fintech space, because ultimate objective is to situate Mauritius as definitely as a fintech, regional fintech hub. So I think just having issuance flexibility and a trading platform is not enough. You equally need a digital custodian for the security use of those tokens. So that's the payment providers, and of course the investors who have the appetite to get into that space. So what does an issuer does? It of course engage in the issue of the tokens. We all know trading platform, it provides and facilitates the digital format of transactions of the tokens to change hand, whether in the primary market or in the secondary, specifically in the secondary market thereafter. Custody services, digital custodian, very important, which it gives a security of the security is a big issue at the moment. So it provides that secure ecosystem for the storage of those tokens and changing hands. Payment service providers, of course, enable investors to pay using the crypto assets, so the transfer from fiat to the tokens and back when redemptions are made. And investors, I'll just give you a bit more visibility because we did not want to open this to retail investors. And the reason being that when we came up again with this whole ecosystem, we also reflected on the strength not only of the legislative framework, but also of the industry. And we realized that in Mauritius over last more than 2 decades, our fund industry has done very well and has really picked up a lot of confidence amongst the international investors. So we really wanted to optimize that to the next level. So what we did is that we restricted it definitely to the expert and the sophisticated investors or the professional CIS. We opened it to only restricted category. So what does that mean? There are 2 streams which can come in. One is the reporting issuer, definitely a very domestic stream, or those who are listed on the stock exchange and they want to come and offer those security, the digital STOs, they are free to do that. But of course, there is higher level of disclosure obligations, and we have a specific rule which applies to that. But the second category, which is more cross-border, is the expert investors, professional CIS. These are the ones basically who have tested the system, the Mauritian as a jurisdiction, and we have defined expert investors, those who can invest more than $100,000 US, and they also falls into the definition of sophisticated investors. And professional CIS open only to sophisticated investors and those investing through private placements. And the reason is that because they understand the nature of the risk, and then they make sort of sound decisions on that basis. At the moment, retail investors are definitely not open to this. And we have kept a category basically that we, as a commission, as the regulator, we are open to look at other categories of issuer. But at the moment, we would like to see and assess how the markets develop, what are the possible risks, and how would we manage those risks before we open up those to other parties. So this is how this is how the investor base would look like, right? The reporting issuers, the professional CIS, and the expert investors. So these are the people who can issue securities tokens. So what are the regulatory requirements? So when you want to offer securities token, they are subject to the same regulatory requirements as we have for other issuers under the Securities Act, where they are made to, just like they are made through the traditional means, which means there has to be a prospectus which has to be issued unless it's done through a private placement. Where a prospectus is required, then of course there is some specific requirements which we have put down in our rules, and they are very, very prescriptive, very easy to follow. And this is where it is coming to the very open route of the reporting issuer. What we have also issued, we've specifically have the guidance notes on the STOs, which are very easy to follow through. It tells you exactly what are the criteria one has to follow. For example, an FNP requirement. It's the first filter before you get into the regulated space. That you have to be fit and proper. There's fit and proper guidance issued. Second filter definitely is the FIAMLA. I think I must emphasize here that just like it applies to the traditional route, our whole anti-money laundering provisions equally applies to the STOs as well. So that is the second filter which has to be applied. And no person basically can offer security tokens to a public unless it is made through a prospectus. And the only places where prospectus is not needed basically is where it is offered through private placements and so on. Yeah. So moving on to, of course, once it goes through the system for licensing, another feature which one looks at as a regulator is what are the associated risks to these STO offerings, and how are the participants or the applicants will be managing those risks. What are the safeguards attached? So definitely, Loretta, I think you're the best person to walk through what is from the market conduct. That is the first risk, right?
Yeah. So so let's go back to the ICOs as we talked about, where you got no equity. These things were the hype of 2017. The biggest problem from a regulatory point of view and the associated risks of an ICO, well, A, you weren't getting equity in the company, and B was we couldn't figure out the beneficial owners. So when you don't, and this is the AML CTF, anti-money laundering, counter-terrorism financing, for those of you who don't understand what those terms are, I'm happy to tell you, because they're the big kahuna of regulators. So there's a body called the Financial Action Task Force. What they do is they have policies and procedures to stop money laundering and terrorism financing around the world. Because what are we all trying to stop in the world? We don't want people to blow each other up. We need to stop things like human trafficking. So they're very important. And money launderers are often drug dealers and so on and so. So we need to keep everybody that comes into the regulator we have to adhere as regulators to the regulators that come out of the FATF. So securities regulators only regulate securities, but if you break FATF guidelines, you can ruin a jurisdiction. You can come under a lot of attack, and it's also not good for the business lines, and it's not good for entrepreneurs. So I think using the security underlying, you just have to follow the securities law. So if you mislead or you defraud investors, you're going to get in a lot of trouble, and we need to know who the beneficial owners are of all these companies. So that takes out the risks of laundering proceeds of crime and abuse of abuse for terrorist activities, things that we don't want to watch. So they are very safeguarded now. everything is written down in the notes how you need to comply with this. And I think also when we first went on this journey in Mauritius to go down the path of regulating digital assets, we did it in 3 specific forms. So we started by saying, all right, what is a digital asset? And as I said, it's just a new asset class. There are subcategories like cryptocurrency. Then we got into what are the risks associated with this digital asset? And we all have heard of the risks around cryptocurrencies. You know, we've heard of exchanges being hacked and people having their Bitcoin stolen and whatnot. So we looked at the inherent risks of what that involved. And you have now a decentralized asset that often exchanges and the people that are trading these assets or storing them don't have the cybersecurity resilience or the ability to understand how you store or how you hold custody of this asset, because it's not like holding money in a bank or gold. You know, they're very tangible. So we spent many months writing the custody license, which it was very important in this road because that was something that kept me up at night. If we don't have have a protection around the people that are looking after these tokens, or the platforms don't have the proper people in place that can manage the digital asset, then we're going to have a problem. So we wrote that next, because the custody of a digital asset is the most important thing, I think, in the whole process. So we wrote that first. Our regulations have been around now for what, 16 months, and many other jurisdictions have actually copied those because we were the first. So Mauritius has done all, things very strategically and structured. So the next part of it was the STO, so the security token, because it's just a security. So we covered off all the risks and associated risks and the safeguards you need to be actually dealing in these new assets and these new asset classes. So also one important thing was a lot of people come to me and say, oh, we've done blockchain for 10 years, we're an expert, yada, yada, yada. Well, if you tell me you're a blockchain expert for 10 years, then you must be Satoshi Nakamoto, who was the one person or the group of people that created Bitcoin. So that's impossible too. There's no university degrees on how one becomes a blockchain expert. It's still a very evolving space, but we have to make sure that you as a company, if you're dealing in these assets, then you have the proper and fit people to do it. It's very important that you have a chief technology officer and a chief data officer that knows how to comply with data protection and also is an expert in this field. So it's very high volatility as well. This asset class in all its forms is still very much a new asset class. 10 years for the birth of an asset class is not long. So they're high volatility. It's something that is not meant for retailers at the moment because we don't understand how the volatility will play out in the next 10 years. We've certainly seen the price of Bitcoin and the cryptocurrencies as other assets. They're very volatile. They're very unstable. I think they've hit a new high today. But these things are not for the non-sophisticated investor because the risks associated with them are still too difficult, and it's still a very it's still a market that's evolving. I think, as I said, Bitcoin and Ethereum gave us the concept of tokenization. So all we're doing is we're putting a security in a tokenized form. So just think of the other asset classes now that we can tokenize. You think of tokenizing, a bar of gold, a unit of energy, a kilowatt hour of energy. Anything that is an asset class traditionally can now be tokenized. And that's the exciting thing about this space, is that it's going to develop and create new asset classes that we haven't even seen. But the one thing about this form of trading a digital asset is, what was the big Kickstarter of the ICO market in the 2017s, and why did people start using it? It was because of what we call the liquidity function of the secondary market. So stock markets traditionally are very hard, all you see around the world, stocks really struggle to get liquidity. In the primary market, which is the first market, that can be difficult. In the secondary market, it's near impossible. So what the ICO market did was show us that we could have instant liquidity in a secondary market. So this is very favourable for investors and people trying to raise capital at the same time, because they can get in and out of the market, and there's liquidity. So every stock market in the world needs liquidity. Volatility is much higher in these secondary markets, but the inefficiency of liquidity in the secondary markets, in traditional markets, has been very, very high. So this is a way that we've seen to get around that. And I think this form of capital raise for the businesses that I mentioned is going to be very, very big in the next few years. If you just look how it's going in the US, I think in the securities token market since April, $6 billion have been raised. So it's big, and it's only getting bigger.
Yeah. So I think now next thing is that once you have the issuer who wants to issue the STOs, the next is, where's the platform? How do you go about getting a platform? So I think I think it's an interesting feature when we realized that the Securities Act, which we had, it was amended, it was issued in 2005 and amended in 2007. Since 2007, it had a specific section, and I'm going to maybe sound legal and boring. It had a specific section 11 in the Securities Act, which actually provided for a TSS license to be issued. An electronic platform was provided since 2007, and that's really very, very, I think, kudos to Mauritius to have come up with that regulation in 2007. So that made life much easier. So TSS license is a specific license other than the securities exchange license. So there are separate provisions which applies to all. There is a whole application process and whole criteria. I think the way the regulation in Mauritius works, or how the commission works, for each category of license which we issue, there is a proper code. I think if you visit FSC's website, you will see a list of licensable activities. So there is a name of that activity, there is a code to that activity. Once you click on that table, you will also find the licensing criteria which applies to that category. There's an application form to that category. There's of course a fees to be paid, and so on. So it's much easier to actually find your way around. So for the TSS application, when you click up, there's a form again. There is certain criteria which are laid down in the law. I have just for the sake of reference put the sections there. But ultimately, what it requires is, it requires definitely that there has to be an adequate resource. Resources here, the people who gonna issue, or the people behind who gonna issue, how much they're gonna allocate the resources, how they will sort of put a very high level robust infrastructure and architecture for the STO trading platform. I think that's very important. Whether it is from the purposes of issuing platform, investors platform in the protection, the trading platform, the whole regulatory and compliance platform. So this is all the adequate resources which has to be put. The infrastructure is, of course, the whole robustness and the resilience and the integrity and the security of that platform. I think that infrastructure is thoroughly looked at. Staffing, the people who's going to manage it, and definitely there's a requirement from a governance perspective to have a board, because board plays an important role to make sure that there is whole transparency and openness, and the whole conduct issues are managed to avoid any civil and criminal liabilities thereafter. So that comes from people who are going to manage it. And most important, the fitness and the proprietary of the people who are the beneficial owners and the controllers. There's a requirement to go till the end because of the FATF requirements. I think all the jurisdictions are following that. And we are also a member of the multilateral MOU with IOSCO. So I think that adds a bit of more compliance requirements, which we are happy to. So which means you need to know who is the ultimate beneficial owner and the controller. And the whole purpose is basically, that is the filter for those people who want to come and test the requirement. They have to meet the regulatory standards, which and the capacity in which they come has to be proportionate. So this is sort of a philosophy which we share. I won't bore you into actually the process of how to do it. I think that again, I guide you to invite you to the website, and I think it's very explicitly provided there. It's also explicitly provided in part 2 of the STO guidance framework, which is dedicated to actually just the TSS framework on the market conduct and so on. What also is provided as a key pillar for assessment is financial soundness. I think that is important. Then the TSS rules, I think that's the flexibility which is offered to the issuers. or those who are coming with a trading platform is that they can come up with their own set of rules, just like in an exchange. For example, you'll have a listing rules. So this also requires a whole set of operational TSS rules or the market conduct rules. How would you do that? On this or the whole cybersecurity rules that could be part of this. So those TSS rules have to be submitted along with the application form, are reviewed by the Commission, and I think that gives a bit of a how would I say, a balance, perhaps a right balance in fostering the innovation on one side, and at the same time having a regulatory oversight, which doesn't become burdensome. So this is how I think we get the balance between innovation and regulatory standards. There is, of course, a minimum requirement for a TSS platform, which has to be unimpaired at all point of times, and that is 35 million rupees or an equivalent amount. We have no foreign exchange controls in Mauritius. It's suspended, so it could be an equivalent amount in any other foreign currency, and also an adequate professional indemnity insurance policy cover that is also required. The processing fee, I'll just mention it for the sake of completeness, is 250,000 MUR. This is the processing fee, and an annual fees which is paid is 500,000 Mauritian rupees again, plus a variable fees which needs to be determined. That is an alternate. So this is how actually a trading system license is granted. So this is just basically, I'm just Yusuf, back to you. I've just put up we've just put up together the big picture which applies to the STOs and the TSS platform.
And I'll just add one thing. So, you know, it's interesting. So if you look at what the ICO market was, it was just for startups. But this is certainly not a market for startups per se. It's for you know, small and medium businesses that are established that want to raise capital, but they don't want to have to go down, you know, the costly way of doing it on a traditional exchange, for instance. So there's nothing, you know, there's nothing convoluted about it. It's a security is just a security. You have to follow the law of the security, but it's a much faster, more efficient way of raising capital. As I said, if you want to raise sort of a Series B to a sort of Series D, and we have the technology now. You know, I wish in my 30 years of being a trader that we would have had some form of technology. I had a piece of paper and a pencil. You know, we would have been, things would have been very different, but technology has changed everything. And we as the regulators understand that. We understand that we can't stifle innovation, because it's going to happen. Technology is going to happen whether we like it or we don't. But we need to have safeguards in place, not only for the consumer and the investor, but also for the entrepreneurs that are building these businesses and people wanting to raise money. They need to have legal clarity that when they come into a jurisdiction, what the regulator says is going to remain the same, and it's not going to change on them in 6 months to a year, and they're going to be in breach of law, which has, you know, serious penalties. Mauritius has been really good. Like we've had a very staged approach at how we look at this new asset class, but we've certainly been in the forefront. You know, we mightn't get out there and tell everyone how good we are, but we've certainly been, you know, the first jurisdiction, as I said, in the custody and the recognition as a digital asset as an asset class. We've been amongst the first in the world, and we're small, we're nimble. You know, but that's why we left it to sophisticated investors, because we're too small to allow this market to go into the realms of retail just at the moment. As we said, you know, that may change down the track, but at the moment it's just a very specific regulation to a very tailored part of the market, as I said, between a Series B and a D for those people that are looking to raise capital through equity.
Yes, and I may just maybe rush quickly to add that certainty, definitely regulatory certainty, everybody is looking for in that space. But equally important is that some international benchmarks, right? Where are you falling back on? And I think that's where it has come out very handy for Mauritius, in the sense that being a member of the IOSCO and signatory to that multilateral MMOU, I think has helped us to fall back on some international norms and standards. For example, in that on the payment intermediaries, FMI, I think IOSCO has issued FMI guidance notes. But very recently, I think as recent as Feb, I was reading Feb, of course, we consulted that, Feb 2020, IOSCO has issued some issues, risk and regulatory consideration relating to crypto assets trading itself. So those are the sort of the benchmarks we do when we assess issuing a TSS license, because it really gives you proactively a feel or a sense as to what are the possible risks, whether it's the cybersecurity, whether it's the data protection, whether it's the market conducts, frauds, hacking, all that. So you can preempt that and actually apply that to a situation or to our application at hand, and then monitor and manage that. So I think this is another side which we very conscious of.
All right, thank you, Loretta and Renu, for that very helpful insight into security token offering and security token trading system. We will shortly be taking questions from the attendees, and I will kindly ask you to drop your question in the Q&A section. And I will now be starting with some questions from the Mauritius Africa FinTech Hub. I'll leave it open since we promote equal opportunity at the hub. So either Loretta or Renu might answer that. Firstly, we mentioned a lot, you mentioned a lot about security and risk associated to trading, and especially with digital assets. I just wanted to know if there was anything in particular that you would stress upon that token issuers should be wary of, especially in assessing which custodian to be using or DLT technology to use?
So we as regulators, we cannot regulate technology. That's the start. Yeah, technology is, the internet has shown us that it's out of the realm of anybody regulating it. One of my greatest mentors that I have is Bob Kahn, who built the internet. So, and I understand how regulations came around the internet. They weren't particularly good for 30 years, and I think we've understood from the internet that walled garden approaches don't work. So the first time in history, we need the industry, that is the people building these systems, the policymakers and the regulators to all come together and figure out what the rules are. So we've been very collaborative with industry when we've been writing this regulation, because as general, regulators are not technologists and technologists are not regulators. So we've needed the help of the industry to help us understand what this technology looks like, what the technologies look like. So it's very important that I think we say we're technology agnostic. And what was the second part of your question, Yusuf?
Sorry, it was about how to assess the DLT technologies.
So as I said, we were very strategic when we started to write these regulations. As I said, we first, digital assets recognised as a new asset class with a subcategory of which was a cryptocurrency. Second being custody. So if you apply for this, you also need to get a custody license, because we know with our custody regulations, it's tried and tested. We had every organisation, industry experts, we had people that secured nuclear facilities, other regulators help us with that regulation. So if you want to come in and be a platform, you have to get a custody licence to start with, and that's already our previous regulations. So we take custody very seriously, because as I said, it's not like holding money in a bank. You're dealing with a decentralized assets that may be in another jurisdiction. So it's important too that the regulatory framework now globally is starting to align, because regulatory arbitrage was starting to become quite a problem. But I think, as I said, everybody's now referring to a digital asset. When I started to write regulations around this, nobody was referring to digital assets. There were crypto assets, there were virtual assets, there were cryptocurrencies, but they all effectively were the same thing. So I think we're starting to see harmonisation of regulation around the world, and that's a really good thing. So my aim is that if we have very robust regulation in somewhere like Mauritius, it's equally as good in Bermuda, equally as good as Malta, then companies can now passport between these jurisdictions with the clarification that the legal requirements of what they do doesn't change on them. So I see, in the future, jurisdictions not signing treaties of tax. I think we'll be signing treaties of technology, because that's what people that are raising money, they need markets. You need customers, and I think Mauritius sits very nicely between Africa and India, which are the biggest emerging markets in the world. And where are your customers sitting? There. Where is your capital sitting? So I think technology is enabling the world to shrink. and all these regions to be able to participate in certain activities that were not possible in the past because we didn't have the technology.
And I think just from the custody side, Yusuf, I think there's two ways. One, I think Loretta just mentioned, is that to have the custody license issued, the custodian present in Mauritius. But we know sometimes because of the geographies and perhaps spread of the investor base and so on, it may not be possible. So what we are also giving that flexibility that it could be any other custodian sitting in any other YOSCO member states. So that is so that we can operate within that network. So that is the only concession we giving at this moment, and it's equally taken on board.
All right, thank you. So my next question would be about the trading, more specifically about the trading platforms and in terms of compliance. Recently, we had quite a reports on AML and CFT compliance in Mauritius. Just wanted to know that that's a change from the current stock exchange where most of the AML and CFT compliance is done by stockbrokers. And now we're moving to the trading platform that would be conducting the AML and CFT compliance. Most of the advantage of the blockchain technology and DLT, it's about anonymity and the speed at which transaction can be conducted. So is there anything you would hate that? I think that's mostly probably someone best to answer that would be Renu.
On the AML bit. So what does AML CTF come down to? It's the beneficial ownership. So if you are going to have a company and you're going to come to Mauritius to do these activities, we need to know who the beneficial owner is. That is the crux of AML CTF. If you know the beneficial owners, and there is parts of the law which can get you in a lot of trouble from a security regulator perspective, which is civil penalties, but also from a criminal penalty, which means that you go to jail. So we take that very seriously. The jurisdictions that I've written regulation and laws in, it's both. It's if the beneficial ownership is important, and if you don't, you will face jail time. Nice to sit in a jail on island, but it's still jail, or severe penalties from a regulator.
Yeah, and I think from applying it, I think yes, the intermediaries. The whole key feature of FinTech or going digital is the disintermediation. I agree to that. But I think when we are applying it in the practical sense, and we had some sense of actually very closely looking at some really applications in that perspective, and we realized that application of the AML is basically is not an exception to these type of STO frameworks or TSS. It equally applies. The question is, where does the obligation sit? And in this case, in other cases, we know it sits in, for example, the management companies or the financial institution. But equally, when you come for the STO offerings or the TSS, they equally qualify as a reporting person under our anti-money laundering legislation, which means they equally have to comply with those requirements. The question is, of course, is that what is the future of, for example, do we have a central KYC or eKYC, all those sort of a thing. But I think we are slowly moving in that direction where even the policy setters, the trend setters are talking about digital assets. These are the conversations which are already happening even at FATF level and so on. So definitely from a regulatory perspective, we do not see that this is a lacuna or this is a gap. It's very clear that when you come for and a fund structure, for example, or an issuer who wants to offer digital assets with underlying assets, someone has to. So it will be the reporting person. Whether the reporting person now gets aided with a manager by an intermediary in the sense that the management service provider here will carry out or keep an access to all those data. So there will be a filter. A filter has to be there because ultimate objective is to know to remove that anonymity, know exactly at some point of time data is available, there is access to that data, even if it is on a platform and DLT is being used. I think with DLT, it's easier to access data at any point of time and go to the level of the UBOs. It's much easier than actually where you float a very large size fund and there is thousands and thousands of investors and you have to really go in multi-tier structures to the ultimate UBO is I think it's much more challenging compared to using the least blockchains. It's much easier, and the records could be available as well as who are the users. So to actually conclude, I would say the AML requirements equally applies when you come and offer STOs or PSS. It's a question of how do you build that that architecture around the investor base and the platform.
And it's interesting why I say it's anonymous, because I get asked this question a lot. I think that's one of the biggest folk stories in the history of blockchain. Bitcoin is not anonymous. There is no cryptocurrencies. Very few of them are what we call anonymous. They're pseudo-anonymous because the blockchain in itself is a secure, immutable, transparent database. Can't change it, can't move it, we can see it. So if you're going to launder money using a digital asset, then you're not very smart, because you will be found. And I would argue that cash is the most disintermediated move of value that we have, and it's very hard to trace. Whereas everything that is on a ledger that is distributed to everybody, and we're all looking at the same ledger, makes it the most secure form and the most transparent way to move value than we've ever seen in history.
All right, thank you, Loretta and Renu. One can say that the FSC has been very proactive into developing a comprehensive regulatory framework in regards to custodian service and trading platforms for digital assets. I'll just have a last question before we start with questions from the attendees. Are there any important takeaways that you would like to share with our attendees with regards to STOs or anyone who contemplate to set up a trading platform in the future in Mauritius?
So I think, as we said, we've been very discriminant in the way that what part of the market we're looking for. If you're a startup and you want to go and raise money in cryptocurrencies, this is not for you. This is a security. You are fully regulated under the Securities Act, but you can do it in a digital format, which is faster, easier, more secure. As I said, it's for the small and medium businesses out there that want to raise money through equity, but they don't want to go down the onerous path of going on road shows. So there's that part of the segment of the market have never been actually able to use technology before. And these things, if you go into a stock exchange to try and do an IPO, they're very onerous and they take a lot of money and a lot of time. So I think our technology has just shrunk down processes. So on a security token, if you're happy to be a security, don't look to be a utility token in Mauritius, but you want to raise money and you want to do it in a fully compliant way, this is where you can do it under very stringent safeguards, but we're open.
Yeah, and I think I will perhaps just add, I think Mauritius has embarked on this FinTech journey to be the regional FinTech hub very strategically. I think it has looked at its own strengths. I think the strength is, just to name a few, it has a highly skilled labor force, and compared to other financial centers, I think it's at a very low cost. It has a full-fledged banking system, right? And a legal system, which is hybrid. I mean, sometimes we take these things for granted, but I think they are important. And whenever you move into the digital space, there is always an interface between fiat to tokens and vice versa when you exit. So I think we cannot overlook or ignore the importance of the banking system. And I think the third important fact here is that over the last 2.5 decades, the evolution, I think, of the cross-border or the financial center, how it is evolved, it gives a bouquet of or a wide choice of the legal corporate structures which you can use, whether it is the simple private companies, limited partnerships, trusts, foundations, ethical companies, you just name it, right? And I think they come very handy when you want to structure. And my job is not to advise, of course, I will say that aloud, but I'm just thinking aloud and sharing that thought. So what expectations would be, if you ask me personally, is like, what do I expect? I think it gives a huge opportunity to diversify from the traditional, let's say, the fund structuring or fund administration world to this whole STO world, using financial innovation, using technology, I think we have issued just consultancy on 2 more sort of ecosystem players. One is the robotic advisory and artificial intelligence. I think it's open for public consultations, so it's good to have a look. So I think all those sort of things, and as comes as an alternative investments, it diversifies from traditional fund administration to actually a very new form of investments, whether it could be hybrid or it could be purely token. And I think the second thing it does, it gives access not only to the primary markets, but also I think digital technology comes very handy when it comes to the secondary markets. I mean, instead of issuing dividends, perhaps let's say annually, I mean, technology can do it much, much easier. I mean, it could be on a daily basis or hourly basis, right? People don't need to save and come as a sophisticated investor or as an expert investors. They can start getting into that space. Let's say when the underlying assets, just for example, is real estates, for example, right, for investment trust
or bonds.
So that's another product line which we have is the whole framework for real estate investment trust is also coming into space. And the last point, I think I would expect that it will democratize the whole ecosystem for the private wealth and high net worth individuals to actually come into that space. And I think that was also one of our key initiatives which came out of the blueprint exercise, which the government conducted last year. One was, of course, the fund administration cross-border investment, and the second one was on the whole private wealth. And I think so. I think it's what I'm saying aloud here is to encourage to look beyond the traditional and optimize technology in a bit more holistic way.
Yeah, I mean, it says, well, and the last thing I'll note is that a smart contract. So, yeah, in 2012, this blockchain, so native blockchain, not Bitcoin, was created called Ethereum. Now, what they gave to the world was what we call smart contracts. They're neither smart or they're not contracts. They're just executing code. So, in the traditional finance world, you have to go through a number of things that are signed off in a contract. If you can do that instantaneously with technology, we take out a lot of the risks that we call post-trade. So, you know, we've got you've got credit risk, default risk, all those risks that we had with markets that have taken lots of money out of systems and put a lot of middlemen in systems because of friction made the money for hundreds of years has now been eliminated. So I think this is the exciting thing with technology, is that we can do things now in really new funky ways that we've never even imagined. And Mauritius, we're happy to take the lead on it because, you know, we're small enough, but we're sophisticated in the world of financial services to understand and to take a little bit of risk, because unless we as a regulator take some risk and it's measured, we're not going to go anywhere. So I think it's important that you look at Mauritius as being innovative. It's driven by financial services, and we're very open, you know, to looking at new technologies and new ways of doing old things better.
All right, thank you very much for those answers, Loretta and Renu. I think Mauritius is well set on a journey to be a fintech hub in the world. I will just start with a few questions from our attendees. The first question is from Daniel. He's asking, how does a regulator monitor the ownership and movement of holdings of cryptocurrencies?
So hello, Daniel. Let's be clear, we're not talking about cryptocurrencies. We're talking about a security token. That is a totally different product. So as I said, a digital asset is a new category of assets. A cryptocurrency is a subset of that. We're talking about a security, which is just a digitalized security. So it's not a cryptocurrency, it's a digital security.
Okay, and the next question is from Emo Motimi, asking about, does the FST charge fees on the trading of the digital assets?
No.
We
as the regulator.
We have annual fee, which is flat 500,000 MUR. We haven't really gone into that variable fee on no, I'm not aware of any of
that. Will be the platform. So if you're just saying, I understand the question, but it's a bit more technical, because if you're trading a cryptocurrency at the moment, a Bitcoin or Ethereum, there's Ethereum uses something called gas. I think with what we're talking about, instantaneous swapping of assets, there should be no fees related to that. That's what makes it cheaper and faster.
Okay, thank you very much.
Market force.
Okay, so the next question from M. Martini asking, how do you conduct surveillance over the TSS, the platform?
So if you read our guidance notes, you have to have a CTO, a Chief Technology Officer, and you have to have somebody that is in charge of cyber resilience. So we have a number of checks and balances that we've obviously taken from international standards and norms. IOSCO give us a whole list of these things which we need to do. So we've taken, as we said, we've collaborated quite extensively with other regulators and other large institutions that deal with cybersecurity and cybersecurity risk. We've consulted probably some of the best data scientists in the world. And a lot of that is written in our custody license requirement.
Yeah, and I think, again, it goes back to the question, to the comment I made earlier, is that how do you keep a balance between not over-regulating and allow innovation, because otherwise it goes back to the traditional way. So I think what we've taken here is a very principle-based approach, and that approach is encouraged from, for example, again, from the international policy setters. The IOSCO is, I think, is being a member, can comply with those. So on the ground, how do we manage? First point of contact, definitely for any TSS, like any other corporate, will be the board. I think apart from the technology experts sitting in there, the infrastructure and the resources, I think, is well assessed right at the time of the first filter, which is at the time of licensing. So I think the quality and the experience of the people who are promoting it, people who are managing it, people who are on the board, people who are perhaps going to independently audit it, who is going to independently assess the technology at a certain frequency. I think all those is very important. Of course, then there are some instances you are required to, at certain frequency, submit certain cap tables and so on, just to monitor from a surveillance perspective. But I think this is overall, I think this is how we supervise. Of course, subject to some on-sites. I think lot of and the quality of the custodian services sitting in between on the securities of that whole token, I think that is equally important.
Have the next question now from Susan, saying, so under the STO regime, there could in theory be hundreds of licensed ST issuer platforms and hundreds of licensed security token trading platforms, each run by separately licensed entities, all catering for different markets, companies wishing to raise funds, and investors. This will presumably require considerable resource on the part of the FSC to regulate this platform and maintain the good repute of Mauritius. So the question is, how does the FSC envisage carrying out this role?
So I think it's not a matter of quantity, it's a matter of quality. We don't need, it's what I say to people, if we look back at the boom of 2004, where, the big tech companies of the world came, the Facebooks and the Googles were created out of a bad bubble that burst. But we don't need quantity, we just need quality. And because we're the regulators, we can, we have the ability and to say who will regulate and who we won't. So I think it's a case by case, and quality over quantity.
Thank you, Loretta. So we have a next question from Krishna, just actually composed of two questions. It's asking if tomorrow, say, quoting a company, IBL wishes to issue STOs backed by its shares, how does the value change looks like? How does this change if instead of its share, the asset is backed by its bonds?
So it won't change, it'll just be digital. It's in a digital format. I think
I think what let's say that's a good example. I think let's assume IBL or any company X is today listed, for example, is a reporting issuer on a traditional exchange, and tomorrow it wants to go into a TSS framework and offer the securities token. I think what the value chain here is definitely it gives them a lot of flexibility. I think to move not only in the primary market, which sometimes can be very challenging to move, but also to the secondary market. I think that is the outreach I think the secondary market gives in a very secured environment. I think that is important. Second thing is that what are the alternative investments you can have as underlying investment to your shares? I think that is equally important. Definitely in an international space, one can think about like shares, definitely, but also maybe some would like to go into real estate, to commodity products, and so on. So I think that diversity is definitely important. And third, from a consumer perspective, is that I think they need to have a bit of security of, can I exit? Can I have my returns, especially with all this COVID? And I think people are looking for their security and their exit strategy and the whole price discovery as well. I think all those things are very important. And I think these are some of the value additions which comes into that equation, moving from a traditional space to actually into a digital space.
And cost efficient. I think that's
efficiency, yes.
Yes. So, I mean, I think when what does technology do? We look at what FinTech does. It takes the means of delivering traditional financial products very fast, efficiently into consumers' hands, and that's what this does. So I think people will more and more take up the STOs, because I think the ICO platform proved to us that it works and that we can create instantaneous liquidity in primary and secondary markets. So I think the uptake of having an asset, something that is actually asset backed, is much greater than having something that's not backed by an asset. So I think the scope for more and more large companies doing security token offerings is going to become paramount. We're seeing the uptake just alone in the US, and a number of the platforms like T0 is phenomenal. Even by month, there are more people getting into doing a token offering, because they're faster and they're more efficient, and they take out the need for so many middlemen.
Yes, T0, yeah. Instant settlement. I think that's another feature. Instant settlement is pre-funded. I think those are the another features of this.
Definitely, we are relying on technology to leverage and give investors a panoply of advantages. Since we spoke about tokenization of assets, and the next question from Abdul Kadir is in relation to STO based on debentures, and he wants to know how he can ensure that you prevent or curtail event of default in cases of tokens based on debentures.
So there's, as we just said, there's no risk because settlement's instantaneous. So they're all pre-funded. So the minute you make something instantaneously traded and then cleared in settlement, there's no risks, because you take out the credit risk, you take out the default risk, you take out all the risks that we've had in debentures and bond markets. And I was a bond trader because we were delivering bonds and debentures before we paid for them. So that was after trades, because trade are almost instantaneous, but the clearing and settlement times of every asset class has been so slow because we haven't had technology. And so if you can atomically swap the asset, you take out the post-trade risk. So there's no risk.
All right, thank you. Okay, so we have another question from Krishna asking, why is it that small company are not, okay. So it's saying, what about a small company who is not listed? Can they be a token issuer?
So again, we'll go back to what is the segment of the market that an STO is to. It's for the small and medium businesses that are already founded. So they already have revenue, they already have a customer base. It's not for a startup. It's for a very specific part of the market, which is, I said, Series B. So people that are probably past, the initial seed and angel funding, that are onto a B round or a C or a D, but don't necessarily want to go and give huge amounts of equity to a venture capital firm, because a private placement can be much more efficient, and you don't need to be giving away as much equity if you can place it separately. So I think it gives it gives companies that are in that specific range much more optionality of who they can give their equity to, how much equity they give, and it's not just targeted. You have to go to a venture capitalist firm because they're the only people that are going to give you money in a Series C raise.
All right. So we have another question from Chandra Kumar, asking on the case-based scenario, okay, so it's about the listed entity in Mauritius who wants to go into STOs issuance. He's asking if there has been any consultation with the Stock Exchange of Mauritius for them to allow those companies to create, to allow local listed entities to tap into STOs.
I think currently the way we have done it, not to open it to the whole, whole population, no, definitely not to retail, so that we can understand the market behaviors and the corresponding risk. At the moment, in addition to sophisticated investors or expert investors, it's equally open to reporting issues. Reporting issues are the ones which are basically listed on the stock exchange already. So they are already in that space of issuing prospectus, and so yes, it is open to that. When we issued the STO framework, there was extensive consultation done with all the stakeholders, right, restrictively as well to some specific industry, and also the public consultation. So I think this whole process has been completed. All parties, including the public and the direct and the indirect stakeholders, have all been consulted in this process.
And it's one of those things with technology. So I'll give you an example. So there is Bitcoin. So people at the moment, they can buy gold, and the digital version of gold is Bitcoin. So it's also up to the company. They may not want to do a digital raise. They may not want to do an STO. They may just want to go down the traditional route of raising capital through a stock exchange. So that doesn't go away. If people want to do that, they can still do that. But this is just another option. So we're just opening up markets and possibilities. We're not saying that one is better than the other, but there are certain companies that may be tech companies, they don't want to go down the traditional avenue. Then there are other companies that don't want to go down the STO route either. They would like to go through the old route. So it's actually just giving a broader choice for both investors and companies that want equity.
All right, okay, thank you. We have another next question is from Palmesh, one of the members of the Mauritius Africa FinTech Hub. Is asking, would the FSC be required to approve the TSS platform, including the blockchain being used for that purpose, and any online AML CFT tool being used?
I think we don't regulate the platform, yes, for sure. I think as Loretta mentioned earlier. But when we are considering and assessing the application of a TSS, for example, the whole architecture, I will use that terminology again, which is also includes the trading side of it, is actually assessed. So as a regulator, you take the full discretion of understanding it and understanding the strengths and the weaknesses of that system, so that you are able to understand the corresponding risks and understand the safeguards which a TSS player is supposed to put in place, and which can be monitored thereafter as a part of the market conduct or as a surveillance. So yes, we do ask visibility, we do make an assessment, we do try to understand the technology part better and what it will be subject to, the strengths and the weaknesses, but we don't really regulate the platform.
Yeah, so we can't, regulators don't regulate technology. But what we do regulate is the services and the people providing those services around that technology.
All right, okay, thank you. So we take a next question from Krishna, asking if the share of MCB trades at 250 rupees, then why if a token is issued at 250 rupees, it is restricted to expert investor? So I guess it's about the class of investors, of sophisticated and expert investors that STOs are targeted at. So
I think that's, again, it's like, because we're getting into the new space, it's knowing the unknown, I think, and strategically, I think that we've decided to actually go into that space where there is a demand, and just we want to offer that that choice to those sophisticated investors and expert investors who are already using the jurisdiction and the fund framework. We want to better understand the market behavior attached to the STOs and the corresponding risk. And again, we have kept that option open to consider any other investor class. So I think as and when the appetite or the interest comes in, the Commission is open to consider this.
So we mitigate the risk and harness the opportunity, I think is the best way to put it.
Okay. So thank you very much for all those insights into STOs and the trading platforms that goes along with it. We'll just take two more questions before we wrap up with this session. So again, it's asking from Krishna, who is very active today, asking, how do SMEs raise money then if the same rule for crowdfunding should apply?
I don't understand the question. How do SMEs raise money if, sorry?
Asking how do SMEs raise money under the STOs?
So again, we'll go back to it's not for the startups, and it's not for small companies that have no revenue, no business, and no that don't have a proper business model that's working and already invested. So it's not for that that crowd fund. It's not for that initial startup angel investing round. I said it's specifically for the companies that already have revenue and a business model, and are looking to get equity from sophisticated investors, which they would normally go to through a venture capital firm, but this is just an alternative route to that. So it's not a crowd fund. We have those rules coming up, but it's not about crowdfunding, and it's not about angel and Series A investing. As I said, it's specifically targeted at people from Series B to Series D.
Okay, thank you. Last question from Michelle, asking if there are any trading platform currently registered in Mauritius.
No, at the moment, I think we usually disclose whenever a new license in any new active category is licensed on our website. So at the moment, there's no license issued for TSS. We may have interest, or we may have things under assessment, but no license released as at date.
All right. Okay. Thank you, Renu. So I think it has been a very productive session, and we don't have any more questions so far. And I'll take the opportunity to thank you on behalf of the Mauritius Africa FinTech Hub for joining us today and sharing your wealth of knowledge. And I'll also thank our attendees for being present and for their interesting questions today. Thank you.
Thank you, Yusuf.
And we look forward to welcoming you on our next webinar. Thank you.
Look forward.
Thank you.
Okay.